Hi guys, I'm Dean and welcome to another episode of What Stock. I published a lot of stock analysis online. Two of the questions I always get without fail are, hey, how did you find out about X? And hey, how do you know X is accurate? X usually refers to a statistic such as sales growth or insider buying or return on equity. Today, I'm going to tell you where I get that information, but more importantly, why I know that information is accurate. To start with, you need to understand why I put my money in US stocks rather than putting them in European stocks or other stocks. It starts and ends with the Securities Exchange Commission. The SEC is the government agency responsible for regulating the US securities industry. But what does that mean to you and me? Well, in short, they're the guys that make sure there's no funny business happening with the accountancy of those public companies. No one's fudging the numbers, and more importantly, no one's cooking those books. But who would cook the books? Isn't that immoral? It is immoral, but some companies do it. Why? Cooking the books and making the financial performance, health, and future outlook look better than it is may attract more investors, drive the stock price up, and make the directors rich. It is because of SEC's reputation for stamping that kind of illicit accountancy practices out that I have the confidence to pick up a financial statement of a public US company and know that what I see is pretty much what I get. Now I'd like to introduce you to my good pal EDGAR. EDGAR, or Electronic Data Gathering, Analysis and Retrieval, performs automated collection, validation, indexing, acceptance and forwarding of submissions of companies. EDGAR is the SEC database, and it collects all the financial statements from the US companies, and it allows you to access them for free. But as that tongue twister of a name implies, it can be a little text heavy, and if you don't know how to navigate it, you might not know what to look for, and you may not know how to read it when you do find it. That is to say that you're not well versed with your 10Ks, your 8Ks, your 10Qs, your 425Bs, your 4242B2s, FWPs, etc, etc. Which would be fair to say describes most of us, as most of us aren't chartered accountants with a PhD in advanced economics. But if you've made it this far, you should have the confidence to know that all financial information published by US companies is regulated, it's audited, and it's available for free online, which makes investing in the US stock market one of the safest things you can do. After the dot-com bubble, when everything moved online, including stock market investing, retail investors, that's you and me, took more of an interest in putting our money into US stocks. But we didn't really understand how to navigate or use EDGAR properly, and we certainly didn't know how to read those multiple financial statements that those companies published. And as a result, demand for quicker access to the information that we care about, sales growth, EPS growth, free cash flow growth, book value per share growth, grew. Cue MSN Money, one of the first online market research tools that scanned EDGAR completely and published that financial data that we care about in an easy to read GUI. Wow. Game changer. Now, I, your typical cardboard cutout 9-to-5 working stiff, have the same information as the guys on Wall Street, and it takes me all of 5 minutes to get. Of course, nowadays, there are hundreds, if not thousands, of free, freemium, and premium services that offer exactly the same thing as MS Money did. And all they do is scan EDGAR for the financial information that matters and present it to you in a format that kind of makes sense. So if you've made it this far, you should have the confidence to know that these market research tools take their numbers from the financial statements submitted to SEC and filed away in EDGAR. In short, this is just a clever copy and paste job. All the hard regulatory work has happened before it even makes it to their website. The most important thing I've learned is the information is exactly the same, because they all source it from exactly the same place. EDGAR. The one thing that is different will be their analysis of the information, how they present the information, and how much of that information they give away for free. Based on this alone, it is not a question of finding the best online market research tool, but the one you enjoy using the most. I've used a lot, and for me personally, it doesn't matter how many tools I've used, how many tools developers ask me to beta test for them. I always go back and use the same 4 websites I always have: Yahoo Finance, FinViz, MacroTrends, GuruFocus. Typically how I use these sites looks a little something like this. I use Yahoo Finance for that top level discovery. Share price, EPS, PE ratio, maybe some of those sales growth ratios. I use FinViz to get a broader picture of the financial health and the growth rates of a company. I use MacroTrends to work out the book value and the free cash flow growth of a company. I use GuruFocus to get the gearing ratios and the return on investment numbers like return on equity, return on invested capital, return on assets. Why do I use these tools in this exact way? Force of habit. Why do others use different tools in a different way? Probably the same reason. The reality here is there is no right way or wrong way to screen or shortlist the stocks that you love. The most important thing that matters is all of these numbers are sourced from exactly the same place. Edgar, and you know that these numbers have been regulated, audited, and they're reasonably accurate. Hopefully this sheds a little bit of light on where you can source good company information and what tools you use. If you found the video useful, give it a like. If you kind of like the content that I'm creating in the channel, hit the subscribe button. And if you've got any questions, comments, or feedback, leave me a comment. Thanks for watching.